Hello and welcome to this new video. Today, I'll show you the most underrated Chinese stock and one of the value investments of this decade. We're talking about the ticker BABA. It's the Alibaba stock. Alibaba reported its earnings this week, causing many people to panic. In this video, I'll provide you with an overview of the news and financial data. Then, I'll also share my specific price targets, which could be very important for investors and traders. Let's get started. This week, Alibaba reported its earnings. They managed to beat the revenue expectations. However, the EPS, earnings per share, were down, with profits decreasing by 86%. This is concerning, and the CEO attributes it to user growth and other investments. However, we can see that revenue is growing, and this is just a temporary setback. I can envision a rise similar to what happened with Meta stock, for which I recently made a video. Alibaba is so undervalued that even if they don't increase their profits, they are worth only a third of their real value. This is also the opinion of major investors like David Tepper, Michael Burry, Ken Griffin, and Steve Cohen. We will take a closer look at them as well. They have significantly increased their holdings in Alibaba, Baidu, and JD.com. Analyses of Baidu and JD.com will also be coming. The major investors consider the risk to be low, and for one of these investors, Chinese stocks make up 20% of their portfolio. They wouldn't invest like this if they didn't have confidence. Now let's take a look at the financial data. Before we examine the financial data, I want to briefly explain the company. The Alibaba stock is involved in e-commerce and has many other sectors that allow for comparisons with Amazon. Alibaba also has a very strong cloud segment. They own one of the largest online payment services. Due to its diversification, Alibaba is secure and ranks among the most powerful Asian companies. I also want to briefly touch on the risks. Even though there has been negative news about Alibaba, there are no significant financial risks. For long-term investors, Alibaba should be included in their portfolio. How heavily it should be weighted is another question. Apart from geopolitical risks, which major investors like Burry have certainly considered, there should be no significant risks. Because long-term investors have invested, they likely estimate that we should not see a war between China and the USA within the next 5 years. Now let's take a look at the general data. Even when evaluated using the PE and PS ratios, you can see that it is very cheaply valued. According to analysts' estimates, the PE and PS ratios should be at least twice as high. Therefore, from today's prices, the Alibaba stock should already double, and that alone should be enough reason to invest. Now, let's compare the competitors Mercado Libre, Amazon, Coupang, and JD.com. JD.com is a very undervalued stock. With good growth, Alibaba stock should actually be valued with a PE ratio of 40. The profit decline should be a one-time event and should exceed expectations in the coming years, with revenue also expected to continue growing. Now let's look at the company's financial health. Alibaba is one of the healthiest companies financially in the world. They can easily cover their debts with their cash, which is very good, and there are no risks on the balance sheet. Next, let's look at the company's dividend. The Alibaba stock pays a 1.2% dividend and has announced a special dividend for this year. For a dividend portfolio, the Alibaba stock is also a very good choice because the Alibaba stock is increasing its dividend while remaining financially healthy. Finally, let's look at the largest shareholders. The largest holder is SoftBank with 14.3%. Then come well-known names like Vanguard and BlackRock. BlackRock also has a special permit in China, which if the stock rises, might lead to the creation of new ETFs. Now let's take a closer look at the well-known investors. And yes, one of the most famous investors is Michael Burry, and he has significantly increased his holdings in Chinese companies, boosting JD.com by 80% and Alibaba by almost 70%. What I find very remarkable is that Michael Burry is betting on strong Chinese companies. Burry hasn't just lightly weighted these stocks in his portfolio. They are the two largest positions, each comprising more than 15% of his portfolio. Chinese stocks have a very strong influence on his portfolio. He has also added other investments to his portfolio, such as sports, physics, and gold trust. If you like, I can make a video about gold prices. And if you want a detailed analysis of Michael Burry's entire portfolio, let me know in the comments. Now let's take a look at my course goals. This should not be considered investment advice. This week, the market was very momentum driven, as could be observed from the price movement. First, the long traders were liquidated, then the short traders. It was a very good sign that the stock rose after the poor earnings report. It indicates that Alibaba stock is very undervalued. My price range is between $65 and $82. We have slightly exceeded this range, but it should still be a good buying opportunity. If the stock continues to rise, which is very likely, the alternative would be ruled out. If the stock goes above $120, the alternative would be ruled out. In this target zone, I have always repurchased in my own portfolio. As we can see now, we could already take very strong short-term profits, and we could have already seen an increase of almost 30%, which is really good. And for those who have not yet entered and would enter now and hold only up to the lower edge, gains of 40% would still be possible. For traders who need to manage their risk to calculate an appropriate leverage position, a downside of 23% is possible from today's price levels. There's also an alternative where we would get a new all-time low, which I find very unlikely. If we continue to rise like this, we would expect price targets of at least $170 up to $258 this year. This would mean a price increase of at least 97% to 200%. And now let's look at the long-term view. Just as with the Chinese leading index and the Hang Seng, I am also very bullish on Chinese stocks. I will make another video on the Hang Seng index. If you want videos on that, like and comment so I know you want it. From today's price levels, we would still have a price increase of at least 566% up to 931%. This would mean an above average return, and these price targets could be reached in a few years. One could also imagine a rise similar to that of Meta stock. I have also made a very good video on Meta. You can watch it after this video. I hope I could show you my idea and see you next time.